other concepts. Before we go, hindi pala na-erase yung mga... Class, paki-disregard na lang ng mga markings ha, hindi ko pala natanggal. Hindi na siya pwedeng matanggal. Okay. So, bonds. So, before we go with accounting for bonds, alamin muna natin kung ano ang bonds. And para saan ang bonds. And bakit merong bonds. Sinong nag-i-issue ng bonds. Okay? So, para mas maging meaningful yung pag-aaral natin ng accounting for bonds payable, dapat alam din natin kung ano ang purpose ng bonds. Okay? So, sana pinanood nyo yung shinare ko na YouTube video sa Google Classroom natin para hindi kayo mahirapan intindihin kung bakit yung mga bonds are issued at a discount or at a premium. So before we go there, let's see muna kung ano ang bonds. So ano ba ang bonds? Bonds are debt instruments, debt securities. Okay? When we say debt instrument or debt securities, meron tayong security, financial assets or financial liability. Financial securities can be classified into two. So, depende, we have the debt securities and the equity securities. When we say debt securities, yung mga holder, teka lang, naririnig nyo ba ako? Baka mamaya nagsasalita ako dito, wala pala, hindi nyo pala ako naririnig. Naririnig nyo ako?
Pinig, ma'am.
Okay. Kung may question kung may question kayo, wag niyong i-chat ha. Kung may tanong kayo kasi hindi ko ino-open every now and then yung chat. So kung may tanong kayo, itanong niyo kaagad using your microphone, okay? So debt instrument siya. So, sabi ko nga kanina, financial instruments may be classified into two, debt instruments and equity instrument. Kapag ka debt instrument, ang holder ng mga debt securities do not have an ownership interest into the company dahil ano lang sila, creditors lang sila ng company. Unlike doon sa mga holder ng equity securities, holders of equity securities are considered shareholders dahil ang equity securities is, for example, preference shares or ordinary shares. So kung holder ka ng equity securities ng isang corporation, then you are entitled for an ownership. So tawag sa iyo shareholders, and we all know shareholders are the owners of the company na pinag-investan nila ng pera nila. So bonds is a form of bond is a form of debt security or debt instrument. It is a long-term security. So sinasabi natin sa ating financial market subject, meron tayong dalawang klase ng the financial market may be divided into two. We have capital market and the money market. So sa capital market, tinitrade yung mga long-term securities. So kapag equity securities, automatic mga long-term yun sila kasi walang maturity period yung mga equity securities. Kapag debt instruments naman or debt securities, yung bonds is yung bonds are long-term securities. Ano-ano yung mga hindi long-term, yung mga kasali sa short-term, yung mga money markets, yung mga commercial papers, yung mga treasury bills from the government. So, yung bond belongs siya sa long term. That is why the bonds are traded sa capital market. Okay? So, ano yung mga financial instruments na traded sa capital market? Financial instruments that has a maturity period of longer than 1 year, beyond 1 year. So, treated sila as long-term securities. Yan, capital market. Then we have, so participants sa contract ng bond kapag meron tayong tinatawag na bond issuer. Sino yung mag-i-issue ng bond? Okay, so pwedeng mag-issue ng bond is the government, for example, pwede din ang corporations. So yung mga government bonds, yun yung tinatawag natin na mga treasury bonds. Kapag ka naririnig niyo yung term na treasury bonds, that is actually a bond issued by the government. The Bangko Sentral ng Pilipinas Treasury Bonds or BSP Treasury Bonds. So long-term din yun sila kasi nga beyond 1 year yung maturity period nila. Ano naman yung short-term na ini-issue ng government, yung mga treasury bills, for example, na may mga maturity period na less than 1 year or within 1 year. So merong treasury bonds, that is kapag yung bond na yun is issued by the government, meron din tayong tinatawag na corporate bonds. So yung corporate bonds is the bonds that are issued by the corporations. So ang focus natin dito dahil financial reporting, ang inaaral natin, financial accounting and reporting, ang focus natin is yung accounting for corporate bonds. So bakit ba nag-i-issue ng bonds ang mga company, ang mga private company? Okay, bakit? So for example, ikaw yung management ng company, ikaw yung manager ng company. You are proposing a project. So mayroon kang pinopropose na project for your company. So sa proposal mo, you wanted your company to expand its business. So magkakaroon kayo ng expansion. Yun yung proposal mo. And of course, to execute that proposal, kakailanganin mo ng fund. Kakailanganin natin ng capital fund. Bakit capital ang tawag sa fund na yun? Because that fund is used for capital expenditure. Ano yung mga capital expenditure? Yung mga um, purchase of fixed assets or yung mga projects for expansion. So yun, kakailanganin mo ng capital fund to finance that project. So assuming in-approve ng board of directors yung proposal mo na mag-expand tayo, for example. So ngayon, ang next mo na i-identify is saan mo kukunin yung fund na gagamitin mo to execute that proposal or yung project. Meron kang dalawang options. Either mag-i-issue yung company ninyo ng shares of stocks para maka-raise kayo ng cash from that issuance of shares, or pwede din mag-issue kayo ng bonds. Okay? So, actually, may option ka. Ang option mo is equity, securities, or debt. Okay? Sa debt, may dalawa pang option. Either mangungutang ka sa bangko or mga financial instrument, or mag-i-issue ka ng corporate bonds. Kapag ka nag-issue ka ng corporate bonds, ibig sabihin nun, you are asking, kumbaga, mangungutang ka sa public. Sino-sino yung mga posibleng maging purchasers ng iyong corporate bonds? Pwedeng other companies, pwede ding individual persons. Pero usually, mga other companies, binibili nila yung mga bonds ng other companies. Mga ganon. So ngayon, kung pipiliin mong mag-issue, for example, kung maaalala ninyo sa financial management ninyo, inaral ninyo yung capital structure, di ba? So sa capital structure, tinitingnan kung ilang percentage ng capital fund ang galing sa equity, meaning galing sa issuance ng shares. Ilang percentage na at saka ilang percentage yung nanggagaling sa issuance ng debt securities. So kapag ka ganun, um, yun, ibig sabihin, yung company, pwedeng both, meron siyang equity, ibig sabihin, nag-issue siya ng equity shares, and at the same time, nag-issue din siya ng bonds. Pero hindi pwede na basta-bastang piliin ng company equity or debt, or equity na lang, or debt na lang, or 50% equity, 50% debt, or 70, ganyan-ganyan. Hindi niya basta-basta pwedeng gawin yon. Of course, may analysis na gagawin yung management because kailangan ma-identify niya kung ano yung optimal or optimum capital balance. Kasi, bakit ba tayo nag-i-expand? Okay? Because we would want to our company to grow. Ang pinaka-goal ng management is to maximize the wealth of the shareholders or the owners of the company. Ibig sabihin, ang goal natin is to maintain or maximize the value of the firm and to minimize the cost of capital. Of course, may cost of capital. Anong cost of capital kapag nag-issue ka ng corporate bonds? Yung interest na babayaran mo. Anong cost of capital kapag shares ang inisyu mo? Yung dividends na babayaran mo. So you have to know what is the optimum capital structure. So, alin yung capital structure kung saan na ma-maximize natin yung firm value. And at the same time, na minimize natin yung cost of capital. So, ibig sabihin, kapag ka na nag-decide yung management ngayon na mag-i-issue nga talaga siya ng corporate bonds, ibig sabihin, mangungutang sila from public to finance their project kasi kailangan nga nila ng fund kasi mag-expand sila. So, i-approve ngayon ng Board of Directors yung issuance ng corporate bonds. Okay? So, kapag ka-issue ng corporation yung corporate bonds, meaning nangungutang siya from the public. So, ang issuer ng corporate bonds or ng mga bonds can be the government or the corporation. So, ang bond holder ngayon is yung investor na bumili ng bond na inisyu ng corporation. So, you are given the bond certificate. Example, we have here this picture. I got this one from Google. Okay, ginugel ko lang yun. So, this is an example of a bond. Okay, issued to the bond holder by the corporation. So, ang issuer natin is yung corporation, yung investor, or yung creditor is yung bondholder. So, ito yung example ng bond. So, yung bond, nakasulat sa kanyang face or yung the face of the bond, yung kanyang face value, ito, face value ng bond na ito is $1,000. Okay? Makikita mo din dito sa certificate na to kung magkano ang interest rate at kung kailan magmamature or yung due date ng bonds. And also, itong mga maliliit na font na to dito sa lower part, these are the other agreement included into this contract of credit kasi ito between the bondholder and the company na nag-issue ng bond. Okay? It is signed by the treasurer of the company and by the chairman of the board. Sorry, hindi na mahalata. Ito. Signature ito ng chairman of the board. The board of directors will approve yung issuance ng bonds. Okay? So, that's it. That is bonds. That's how that's the reason kung bakit nagkakaroon ng issuance ng bonds by the corporations. Okay? So next, we have different types of bonds. So yung bonds, pwede natin silang i-classify depending on their characteristics. So may mga bonds na secured, for example, secured bonds, yung registered bonds, may mga bonds na hindi secured, for example, debenture, may mga bonds na mayroong specific asset na nakakollateralize para sa kanila, meron din tayong mga bonds, for example, na may sinking fund provision. Ibig sabihin, kapag may sinking fund provision, yung company nagsiset aside sila ng sinking fund for the future payment of the bonds na inisyu nila. Meron din subordinate debenture, meron din tayong mga compound financial instrument wherein yung bond pwedeng convertible into shares, meaning at a certain point in time during the life of the bonds, pwede mo siyang i-convert into shares. Pwede rin yung bonds issued with share warrants. Meron din tayong bearer bond, zero coupon bond, serial bond, or yung bond na binabayaran yung principal niya on an installment basis, unti-unti over its life, callable bond. So these are the examples of bond classified according to their characteristics. So hindi ito exhaustive. Itong examples na to is not exhaustive, meaning meron pang mga other examples na maaaring hindi included dito sa mga examples na to. So if you're interested to know kung ano-ano yung mga other examples pa ng ban, itong junk ban na ito, this is the yung pinaka-risky na ban because the company or the corporations who issued junk bans are corporations or companies that are experiencing financial difficulty. So, ibig sabihin, there is a high risk na baka malugi yung company na yun and malugi ka bilang isang investor na i-invest mo or ipapautang mo yung pera mo sa company na yun, mataas yung risk. Pero, dahil susugal ka sa mataas na risk, mag expect ka rin ng mataas na return. Okay? So, if you are willing to take the risk, then you can expect a higher return. Sabi nga nila, di ba? That's the basic theory. So, ito mortgage ban related to sa mga fixed property, building, and land, for example. So these are just examples of the different types of bond. So meron tayong tinatawag na bond indenture. This is the legal contract that specifies the rights and obligations of the bond issuer. Sino yung may obligation? Si bond issuer kasi siya yung nangungutang. And of course, the rights and obligation din ng bond holder. So meron silang agreement. So yung agreement nila na yun is a contract. Remember, agreement between the two person, meeting of minds, binding of minds, for example, sa inyong law on obligation and contract. So meron silang legal contract that binds the two uh, the two personalities or entity, the issuer and the holder. Meaning, kung magkaroon man ng mga default, meron kang legal claim. Okay? Pwede mo siyang dala sa court, yung mga ganyan, kung magkaroon man ng mga certain issues, breach of contract, and others. So, meron kang legal claim kasi it's a legal contract. And then, before we go, we go to the accounting for bonds. Sa finance, meron tayong tinatawag na valuation of bonds. Tinatapik sa finance ang bonds kasi nga, issuance of bonds is your one way of raising capital fund, okay? Sa mga to finance your project. So, kapag ka pinag-uusapan ng valuation of bonds, ang tinutukoy dito is kung magkano papresyohan yung bond, kung magkano yung presyo ng bond. So remember yung bond natin, meron siyang face amount. Okay? Yung face amount niya, ito yung babayaran ng corporation kapag ka nag-mature yung bond. So halimbawa, itong bond natin will mature in 2001. So, pagdating ng maturity date, ang babayaran kong pera kung dun sa kung sino man yung may hawak ng bond na to will be $1,000. That is the face of the bond. Pero at the time of issuance, for example, at the time of issuance, nung inisyo itong bonds na to, for example, inisyo itong bonds na to, December 19, yun bang date? Okay, for example, at the time this bond was issued, magkano kaya yung binayad sa akin? Magkano kaya yung perang natanggap ko doon? Magkano kaya yung perang natanggap ko from the investor? Okay? Yun ngayon yung tinutukoy natin dito sa bond valuation. Meaning, how much is the price of the bond? Remember, you are issuing the bond because you wanted to generate cash na gagamitin mo to finance your project. So, how are you going to determine the price of the bond? You are going to use the discounted model. Okay? Discounted model. So, based on discounted model, the fair value or the fair price of the bond is based on the present value of the expected future cash flows. So ano yung mga future cash flows dito sa issuance ng bonds? Okay? Of course, dahil ikaw yung may liability, ikaw yung nangutang, cash inflow yung pinag-uusapan dito. So ano-ano yung mga cash inflow dito? Yung interest payments. Okay? Interest payments, cash outflow. For example, pwedeng annually, semi-annually, nagbabayad ka ng interest. So this is your cash outflow. Ano pa? Mayroon pa bang iba? Meron pa yung payment ng principal at the maturity date of the bond. So payment of principal. Okay? So ito, yung tinutukoy niya dito na expected future cash flows. Okay? So ang ibig sabihin, ang price daw ng bonds using the discounted model is the present value of both the interest payments, madaming interest payments kasi every year, for example, nagbabayad ka ng interest or every semi-annual nagbabayad ka ng interest. And the present value of the principal. Si principal, babayaran mo sa due date or sa the maturity date. Okay, due date. Okay? So, ito, babayaran mo pwedeng annually or semi-annually. Okay? So, sinasabi sa theory ng bond valuation, discount rate or the required rate of return is a function of the default risk-free yield and the risk premium. Ano yung default risk-free yield? Ibig sabihin, yung interest rate na walang default risks. Meron bang mga interest, meron bang mga investment na walang default risk? Okay? Nalaman natin sa ating financial markets na ang mga government-issued securities are default-free. Default risk-free. Wala silang default risk. Bakit? Because unlike the corporations or companies, yung government is never na mababankrupt. So the government will always be there to pay their liabilities. So kung yung bonds na hawak mo is a treasury bonds, meaning yung interest na kinikita, yung interest na kinikita mo from that bond is an interest that is risk-free or yun yung risk-free interest na tinatawag natin. Risk-free meaning wala siyang default risk or the risk na hindi ka mabayaran because naging insolvent yung kung sino man yung nag-issue ng company nag-issue ng bonds. So, yung discount rate, itong required rate of return, ito yung return na gustong kitain ng investor kapag nilagay nila yung pera nila doon sa bonds ng corporation. Meaning, kung bibilin ko yung bond na yan, na i-issue ng company na yan, ito yung interest rate na gusto kong kitain. Yun yung required rate of return. Yung required rate of return ngayon ang gagamitin natin as discount rate to discount and determine the price of the bond. Okay? Sa accounting for bond, usually, ang ginagamit natin na term, although hindi sila magkapareho, pero meron silang, kumbaga, hindi sila, it's not necessary that the effective interest rate is also the required rate, okay? Pero sa accounting, usually, ang ginagamit natin na discount rate is the effective interest rate. Okay? So, ngayon, sinasabi niya, the required rate of return is the risk-free rate plus the risk premium. Ano tong risk premium? Ito yung percentage na dinadagdag mo dun sa risk-free rate because of the risks. Ibig sabihin, dahil nga risky ang investment na yan, mas mataas yung i-require mo na interest rate. Yung required interest rate mo is higher than compared doon sa mga walang default risk na investments. So, ibig sabihin, the higher the risk, the higher uh, you would want the interest rate to the higher the interest rate that you will require from that investment or yung bond. So for example, ang risk-free rate, meaning the rate ng treasury bonds is 5%. Okay? So, ang ang required rate of return mo is 7%. So, ibig sabihin yan, meron kang nilagay na or dinagdag na 2% for the risks. Okay? Because risky ito, I want to earn 7%, higher than the risk-free. Ibig sabihin, dinagdag mo yung 2%. Itong 2% na ito ngayon yung risk premium. Dinagdag mo yan siya because of the risk. So, kung mapapansin nyo, kung tataas yung risks, bye-bye ma'am. Kung mapapansin nyo, kung tataas yung risk, tataas din yung required rate of return or yung interest rate na gagamitin natin to discount the face value ng bond and yung mga future cash flows ng bonds. So, kapag ka mataas yung discount rate na gagamitin natin to get this one, the face value so yung face value is higher than the price ng bond. Anong ibig sabihin nun? Di ba ito yung bond natin? Ang bond natin is $1,000, for example. So kapag ka mataas, mas mataas, ito yung nominal rate. Ito. So kapag ka mas mataas yung effective rate or yung discount rate compare sa nominal rate, ibig sabihin yung price ng bond will be lower than this amount. Okay? So anong ibig sabihin nun? If the risk increases, that the required rate of return also increases and the price of the bond decreases. So meron tayong inverse relationship. So the prices of the bonds have an inverse relationship to interest rates and risk of default. So kapag, for example, itong itong bond na to, 7%. Assuming 7.5. O yan, 7.7 and 5/8% yung kanyang interest rate. Pero may mga other investment available in the market na nag-offer ng 9% interest rate. So, ibig sabihin, mas mataas yung interest rate sa market compare sa interest rate ng bonds na ini-issue ng company mo. Of course, yung mga tao or the public, not only individual person but also other companies, mas pipiliin nilang mag-invest doon sa investment na may mas malaking interest, di ba? So how are you going to sell your bond kung mas mababa? Dahil nga na-prepare mo na kasi ito siya nagdaan na siya ng mga process, ready for issuance na siya. So fixed na yung mga interest rate dito. Tapos biglang tumaas pala yung market rate, market interest rate. So ngayon, ang stated na interest rate dito sa bond mo is ito lang, pero dahil nagtaasan yung interest rate sa market, mas mataas na ngayon yung interest rate sa market, for example, 9%. So, yung mga tao, mag-i-invest sila doon sa mga investment na nag-o-offer ng 9% interest rate. So, walang mag-i-invest sa'yo. Walang bibili ng bonds mo. So, anong gagawin mo para mabenta mo yung bonds? You are going to sell that bond at a lesser amount. Meaning, you are going to sell this bond at lower than its face value. Kapag ka ganun, ibig sabihin, dini-discount mo yung bond. So, ibig sabihin, the price of your bond will be lower than its face value. Ito, yung price ng bond. So, how are you going to determine this one? Kukunin mo yung present value factor of 1, imumultiply mo sa face value. Ang gagamitin mong interest rate is yung effective interest rate or yung required rate of return plus the present value factor ng interest payments. Okay? Ang gagamitin mo dito is annuity, present value factor of annuity, either annuity due or ordinary annuity. Okay? So that is the bond valuation. So Kapag sinabing bond valuation, ibig sabihin how much will be the price of the bond. Okay? So, tatandaan nyo, yung bond prices has an inverse relationship to interest and risk. The higher the existing market interest rates, current market interest rates, the lower will be the band's prices. Okay? So, now we're entering accounting. So, ito, finance perspective, pero related din siya sa accounting for bonds. So, accounting for bonds, ang applicable standard for bonds is the Philippine Accounting Standard number 32 or financial instruments presentation. That is for the presentation of the bonds payable dahil obligation siya and it is an financial instrument so presented siya sa liability section. And then another standard, the Philippine Financial Reporting Standards number 7 or the financial instruments disclosures. So yung mga other disclosure related to the financial instrument. And then we also have the PFRS 9 or the financial instrument standard for financial instruments. So according to IFRS 9 or PFRS 9, IFRS yung international standard, pero kapag inadapt natin siya sa Philippine setting, tinatawag natin siyang Philippine Financial Reporting Standards or PFRS. So this standard requires an entity to recognize a financial asset or liability in its statement of financial position when it becomes party to the contractual provisions in the instrument. So kapag merong contractual agreement na between the issuer and the holder of the bond, that's the time you are going to recognize saan mo makikita yung mga financial instruments na to. It will be recorded in your balance sheet kung kayo yung investor or holder ng bond, then ibig sabihin financial asset yun. Pero kung kayo yung issuer or ikaw yung corporation na nag-issue ng bonds, then you have the financial liability. And then, those financial assets and financial liabilities are initially recognized, okay, at its fair value, plus or minus in the case of financial asset or financial liability not at fair value through profit or loss, transaction costs that are directly attributable to the acquisition or issue of financial asset or financial liability. So dahil ang bonds payable natin is not a financial liability measured through profit or loss, kasi yung measured through profit or loss, usually ito yung mga tinitrade. So, yung bonds payable, sa point of view ng investor, is held by the investor to accumulate earnings, yung mga passive earnings. Ano yung passive earnings? Interest. Yung mga instrument na minimeasure through using fair value through profit or loss, yung mga tinitrade. For example, binili ko siya kasi ang purpose ko is hihintayin ko na tumaas ang value niya tapos ibebenta ko siya. So yun, mini-measure mo yung mga ganong klase ng financial asset at fair value through profit or loss. Pero dahil ang bonds is not through profit or loss. Kasi ang intention mo kapag ka nag-invest ka sa bonds is to hold that bond and earn interest earnings, income, interest earnings sa point of view ng investors. Pero of course, liability ang pinag-uusapan natin, we are on the point of view ng company na nag-issue ng bond. So dahil ikaw yung issuer, ikaw yung magbabayad ng interest payments. So financial liability, of course, bond is a financial liability. So i-measure natin at initial recognition ang bonds at its fair value minus the transaction costs directly attributable to the acquisition of the financial instrument. Okay, so yun. So we will have for initial measurement. I'm sorry, hindi ko na-delete yung mga writings. Hindi na siya kasi ma-delete dito. Okay, anyway. Wala si Bandingan. Si Bandingan. Parang parang nag-attend na siya ng class yung sa previous class. Okay na. Okay. Sige, okay na. Okay. Okay. So, initial measurement, class, sorry mali ito. Baka mali ito kayo. This is wrong. Anyway, kapag in-upload ko yung presentation ko, ayusin ko muna siya bago ko i-upload sa Google Classroom. So, this should be minus, okay? Fair value ng initial measurement ng bonds payable is at fair value minus direct transaction cost, okay? So, fair value. So, assuming wala muna tayong transaction cost. So, ibig sabihin, the bonds is measured initially at its fair value. Wala muna tayong transaction cost. So, kapag nakaka-encounter tayo ng mga problems sa bonds payable, usually, sometimes, instead na bibigyan kayo ng dalawang interest rate, bibigyan kayo ng quoted price. So, kung binigyan kayo ng quoted price, yun na yung magiging carrying amount at the beginning or issuance date ng bonds ninyo. Meaning sa initial measurement, i-record nyo yung bonds using that quoted price. So, ang example niya is ito. So, ang example niya, so, a company issued 5 million 8% 5-year bonds in 2020. During the date of issuance, that is January 1, 2020, the bond were sold at 96. So, itong 96 na to, ito yung kanyang quotation, quoted price. So, to get the value of the bond, or meaning, the carrying value of the bonds nung January 2020, which is yung kanyang initial measurement, will be 5 million times 0.96. That is 5 million times 0.96. Sorry, natabunan na siya. So, this is 5 million times 0.96. So, ang ibibigay sa inyo is whole number, pero you are going to convert that number into decimal. So, 0.96 yan. So, 0.96. So, you will get 4,800,000. Itong naka-yellow dito. So, the price of the bond, ibig sabihin, i-record mo yung bond at 4,800,000. Yan yung kanyang carrying value. Anong magiging entry natin dyan? Okay? Entry natin, dahil nag-issue tayo, bakit tayo nag-issue ng bond? Because we want to raise capital. Gusto nating mag-raise ng cash. So, debit cash. Dahil ang price ng bond natin is 4.8, ibig sabihin, bibiliin siya ng investor at 4.8. Okay? This is debit. Then credit, of course, yung bonds payable. Tatandaan ninyo, itong bonds payable na ito, always siya at face value. Face value niya is 5 million. So, mababawasan lang itong account na ito, itong bonds payable na ito, kung nagbayad na kayo or ni-retire nyo yung bond. So, you always record bonds payable account title at face value, kung ano yung face amount ng bonds. So, yung the difference between the face value and the cash proceed or yung purchase price or yung proceed kapag ikaw yung issuer, which is 200,000, tatawagin natin yung discount on bonds payable. So, i-debit natin siya as discount. Discount on bonds payable. Okay, I hope na nakaka-follow kayo kahit na ang pangit ng sulat ko. Okay. So, yan. So, yan yung magiging journal entry natin. So, ngayon, kung titingnan natin yung balance sheet, assuming December 31 na. So, December 31 mo in-issue yung bond. So, ito yung naging entry mo ng December 31. Ngayon, magre-reflect sa balance sheet ng company. Madadagdag to sa cash, of course. Ito, Debit balance siya pero hindi mo yan makikita doon sa current asset section ng balance sheet because this is a contra liability account. So, i-deduct mo yan dito sa 5 million para makuha mo yung carrying value ng bonds payable. So, ipe-present mo doon sa financial sa balance sheet, bonds payable na 5 million minus discount on bonds, unamortized discount on bonds payable na 200,000. So, ang carrying amount ng bonds payable mo is 4,800,000. So, that is for the quoted price. Okay? Para kapag ka naka-encounter kayo ng ganitong problem, alam nyo kung ano ang gagawin. So, next, other than the quoted price, pwede rin na bibigyan kayo ng other than the nominal interest rate, bibigyan din kayo ng effective interest rate. So kapag ka binigyan kayo ng effective interest rate and walang quoted price na binigay, kapag ka binigay yung both, kapag sabay na binigay yung quoted price pati yung interest rate, ang gagamitin nyo yung quoted price. Gagamitin nyo yung effective interest method kapag ka walang quoted price. Okay? So kung assuming walang quoted price, ang binigay sa inyo ay dalawang interest rate. Isa pang interest rate which is the effective interest rate. So kapag ka ganito, ang binigay sa inyo, you are going to do the discounted model, yung kanina, yung ginawa natin kanina sa bond valuation. So ang gagawin nyo, discounted model, meaning you are going to determine the present value of all the future cash flow. So ano ulit yung mga future cash flow? The interest payments and the principal payment during the maturity date ng bond. Okay? So, sa problem na to, we have Alnor Company issued 7% bonds with a face amount of 1 million due January 1, 2029. So, January 1, 2020, you have to be careful sa mga given. Sinabi dito January 1. So, ang bilang mo, kung bibilangin mo kung ilang years yung life ng bonds na yun, you will start since January 1 ito, you will start from 2020 up to 2028 only. You will not include 2029 kasi nga hindi na 1 year ang cover nitong 2029 kasi end na siya January 1. So, ibig sabihin, technically, nag-end na yung life ng bond December 31, 2028 pa lang. So, that is, ang life ng bonds natin ay 9 years. Okay? 9 years from January 1, 2020 up to January 1, 2029. Another important detail that you have to be careful with is to determine kung paano yung pattern ng interest payment. So, dito sinasabi niya semi-annual yung interest payment. Ibig sabihin, twice a year tayong magbabayad ng interest. Another thing, yung interest payment niya is January 1 and July 1. Meaning, meron tayong advance payment. So, kapag advance payment, of course, dahil annuity ito, annuity ang gagamitin natin na present value factor. Pero dahil meron tayong payment in advance, ang gagamitin natin na present value factor would be the present value factor of annuity due. Okay? Annuity due. Bakit annuity due again? Because merong advance payment. The interest is paid during the time na in-issue yung, yan, kasabay ng issuance. So, yan. So, annuity due. So, kung halimbawa hindi siya advance payment, every end of the period siya binabayaran. Ang gagamitin mo present value factor would be present value factor of ordinary annuity. At dahil semi-annual ito mga information na to, you have to be careful. Semi-annual siya, so meron kang life na 9 years. You have to multiply 9 by 2. Then, ibig sabihin, you have 18. 18 times kang magbabayad ng interest for the whole period, for the whole life of the bonds. And then, dahil nga semi-annual lang interest payment, yung interest rates mo, i-divide mo din sa 2. So, ang nominal rate mo will be 3.5. Tama ba? 7 divide 2. And then you have effective interest rate na 3%. Okay? So kung mapapansin mo, mas mababa yung ating effective interest rate compared doon sa nominal interest rate or yung interest rate that you will see on the face of the bond. So ibig sabihin, anong nangyayari? Anong meron kapag ka mas mababa yung effective interest rate compared sa nominal interest rate? Ibig sabihin, the bond will be issued at a premium, meaning mas malaki yung ibabayad. Kailan nangyayari yung bond issued at a premium? Nangyayari siya kapag ang situation is kabaliktaran ng situation ng kapag nagkakaroon ng discount. So, ibig sabihin, for example, balik tayo dun sa first slide natin. For example, di ba, ready for issuance na yung bonds natin and the existing interest rate ng bonds natin is 7.5 over 8%. And the current existing, ang nangyari sa market, nagbabaan yung interest rate sa market. So ngayon, ang interest rate sa market is 5%. So meaning meron tayong effective interest rate na 5%. Ngayon yung mga investors, mag-aagawan sila sa bonds mo. Ibig sabihin, mas gugustuhin nilang mag-invest dito sa bonds mo kasi mas kikita sila ng malaki kasi mas malaki ang interest rate. Okay? Rather than investing in other investment, mas malaki ang kikitain nila dito kasi the existing market interest rate is lower than your interest rate. So, ang mangyayari, the buyer, kung sino man yung gustong bumili nitong bonds na to, gustong mag-invest sa company mo, mag-o-offer sila ng mas mataas na price. Okay? So I will pay for that bond, for example, at a higher amount compared to the face value. So, ibig sabihin, kung $1,000 ang face value, the investor might be willing, for example, to pay 1,200. So, mas mataas compare sa face value niya. So, kapag ganun yung situation, ibig sabihin, your bond is issued at a premium. So, mas mataas yung price ng bond mas mataas yung price ng bond compare doon sa face value niya. So ngayon, kagaya nung kanina, yung sa discounted model, we are going to determine the price of the bond using the present value factors. So how are we going to determine the present value factors? So I am assuming na marunong na kayo mag-compute ng present value factors. So for this problem, ang gagamitin nyo to get the present value of the interest payments is the present value factor ng annuity due. Bakit annuity due? Kasi merong advance payment. Okay? So, anong gagamitin yung interest rate dito? Remember, ang gagamitin yung interest rate to discount the cash flow is the effective interest rate. Bali, kung ito ang gagamitin nyo, anong gamit nitong 7% or ng 3.5? Gagamitin nyo ito to compute for the interest payment. Kasi ang interest payment niyo is the nominal interest rate multiplied by the face value of the bond. So in this case, this is 3.5 kasi nga semi-annual multiplied by 1 million, then you have 35,000. Ito, 35,000 na semi-annual interest payment. So how did we get this 14.1661? This is the present value factor of annuity due using the effective interest rate na 3% at N. Ang N natin is 18. Bakit 18? Ito. Okay? The total number of interest payments na meron tayo throughout the life of the bond. Okay? So, try to compute kung makukuha nyo itong 14.1661. So, substitute the given to the formula ng present value factor for annuity due. So, you are going to use 3% and ang N ninyo is 18. you should be able to get this 14.1661. So, and then to get the present value of your interest payments, you multiply this present value factors to the interest payments, makukuha nyo yung present value ng interest payment. Then for the present value ng principal, dahil yung principal ay isang beses lang siyang babayaran siya at maturity date of the bond, ang gagamitin yung present value factor is the present value factor of 1. Kasi lump sum. Once lang siyang babayaran ng company. Unlike doon sa interest payment na every semi-annual, magbabayad ka ng 35,000. So you will get you will use the same interest rate and the same number of payments to get this present value factors. Of course, you should know kung anong formula nito. I am expecting na alam nyo na kung ano ang formula niya. So you will get this present value factors, then you will multiply that one to the 1 million face value kasi itong 1 million na to babayaran mo at the maturity date and you want to bring that value into the present. So to bring that value to present, you have to discount it using the present value factor. So i-multiply mo, then yung answer mo dito, plus yung answer mo dito is the carrying amount of your bonds. Ito yung total present value ng lahat ng cash flows. So, ito yung magiging initial measurement ng iyong bonds payable, carrying amount ng iyong bonds payable. So, sana nasundan nyo and nakuha nyo yung tamang answer. So, ang magiging entry mo, yes, may question? May question kayo? Ha? Carrying amount ng bonds payable. Ito. 1,083,213.5. Nakuha nyo ba? Nasundan nyo kung paano kinompute? Okay, so you can observe mas malaki yung carrying value, carrying amount at initial measurement ng bonds compare sa kanyang face value. Anong face value niya? Ang face value niya is 1 million. Pero ang carrying amount niya at January 1, 2020 is 1,083,000. So, merong 83,000 something na excess. So, ibig sabihin, your bond is issued at a premium. Diba? Sabi nga natin kanina, issued siya at a premium kasi mas malaki yung interest rate ng bond or yung face or yung nominal rate niya compare sa effective interest rate. So kapag ka ganun, mas malaki yung, kumbaga mag-o-offer ng mas malaking price kung sino man yung gustong bibili ng bond natin. They are willing to pay higher price because alam nila na mas kikita sila ng mas malaki doon sa bond na i-issue ng company. So you can see, this one is higher than 1 million. So your bond is issued at a premium. So ang magiging entry nyo dito, ito yung entry kapag ka-discount. Ang entry kapag ka-premium, you have cash. Bye-bye, ma'am. Ingat, ma'am. So, ang entry, cash. So, anong i-record nyo as cash? Yung total cash na na-receive nyo. Ito yung total cash na na-receive natin. So, yan yung i-debit natin. Kung magkano yung na-raise ninyo na pera through the issuance of the bonds. And then, i-credit natin bonds payable. Again, sabi ko kanina, always at face value yung bonds payable. 1 million. Sorry, 1 million. 1 million. Yes, 1 million. So, always at face value. So, para ma-balance natin yung debit side and credit side, ang debit natin is 1,083,000. Ang credit natin palang bonds payable 1 million. Yung difference nila ngayon, yun yung i-consider mo and i-record mo as credit to premium on bonds payable. So, itong premium on bonds payable, kagaya ng discount, ina-amortize din natin siya. Pero, kung itong discount, dinideduct natin sa carrying amount ng, sa face value ng bonds, ito yung unamortized. Ito. dahil initial measurement pa lang tayo, hindi pa siya na-amortize. Itong premium and discount. So, i-record natin yung difference. That is 83,213. Okay, 0.5. Okay. So, itong premium, i-amortize natin siya. Ibabawas natin sa interest expenses. Later, makikita natin kung paano siya i-journalize and paano siya ina-amortize. So, to identify the carrying amount ng bonds, you have to add the premium. Kapag ka premium, ina-add natin. Kapag ka discount, dinededuct. Okay? So, that is the difference. So, that is for the discounted model. So, remember ulit, kapag ka binigyan kayo both quoted price and effective interest rate, ang una nyong gagamitin, huwag nyo nang pahirapan ng buhay nyo, yung quoted price. So, kung gagamitin nyo lang yung effective interest rate kapag ka hindi available yung quoted price. Okay? Any question?
None, ma'am.
Okay, very good. So, hindi ko na ipapakita yung solution dito na nilagay ko kasi mali yung solution dito. Mali yung number of life ng bonds na nalagay ko. That is why sinolve ko na lang siya again ulit dito. So, itong mga red marks, ito yung proper solution. Later, bago ko i-upload yung slide, ayusin ko muna yung solution. Okay, so after that, we have balik naman tayo dun sa issued at a discount or at a premium. So kapag ka-issued at a premium siya, again, ulit-ulit tayo para hindi natin makalimutan. Kapag ka-issued at a premium siya, mas malaki yung kanyang fair value or yung kanyang purchase price kaysa sa kanyang face value. Okay, sinabi natin kanina, kapag ka mas issued at a premium yung company, ibig sabihin, ang backstory nun, malamang mas malaki yung interest rate ng bonds mo compare sa interest rate na existing sa market. Ibig sabihin, the investors would want to invest into that, would want to buy your bond instead of investing into other investment na nag-o-offer ng lower rate. So ngayon, they are willing to pay you more compared doon sa face value ng bond. Kasi alam nila na mas better yung bond mo compare sa other investment. So they are willing to pay more. So yun yung backstory. Kaya mas malaki yung purchase price or yung fair value ng bond compare sa kanyang face value kapag ka yung bond na yun ay issued at a premium. So ibig sabihin the effective rate is lower than the nominal rate. And then, dahil mas malaki yung nominal rate, mas mababa yung effective rate sa nominal rate, yung interest expense mo ay mas lower din. Okay? So dahil nga tama yung decision ng mga investors. Ano naging tama yung decision ng mga investors? Dahil magbabayad ka nga ng mas malaki interest. So mas malaki yung kikitain nila kung sa'yo sila nag-invest. So mas malaki yung interest paid. Ito kasi interest expense, you are going to compute that one using effective interest rate. And then yung interest paid, you are going to determine that one using the nominal rate. So yung interest paid, ito yung actual interest na babayaran mo. Itong china-charge natin sa interest expense, other than the interest paid, yung nire-reflect din natin dito yung amortized premium, yung amortization ng premium. Okay? Kaya mas mababa yung interest expense. Let's have an example. Hindi na siya klaro. Natabunan na siya. Ano ba ito? Okay, this is actually the same problem sa previous slide. So, carry over ko lang yung example natin sa previous slide kasi nga pareho silang issued at a premium. So, basically, na-discuss ko natin kung paano sinolve itong problem na to. So, ang answer niya is yung solution natin sa previous slide. Okay? So, ito nga, issued siya at a premium kasi mas malaki yung nominal rate compared sa effective rate. Okay? And then, we computed kanina sa previous slide, na-compute natin mas malaki din yung fair value niya compare sa kanyang face value. And the interest expense. Makita natin yung interest expense paano kinompute. So, dito, ito, balik tayo dito. Ang interest expense, we're going to compute interest expense itong carrying amount multiplied by the effective rate na 3%. So, 1,083,213 times 3%. Yun yung magiging interest expense ninyo. 1,083,000 times 3%. So, 32,496.41. Ang inyong interest paid is 1 million times 4.5. That is 35. 1 million times 3.5. That is 35,000. So 35,000 interest paid higher than the interest expense na 32,496 point something. That is because your bond is issued at a premium. Okay? Yun na yung sinasabi niya dito. Ayan, interest expense is higher than the interest paid. Conference room. Okay, so that is the bond issued at premium. So next slide tayo, bond issued at a discount. Okay, kapag issued at a discount, kabaliktaran lang siya ng issued at a premium. So kapag ka-issued at a discount, ibig sabihin mas malaki yung interest rate sa market or yung effective interest rate compared doon sa interest rate sa face ng bonds or yung nominal interest rate ng bonds. So we have fair value will be lesser than or yung cash proceed mo doon sa issuance ng bonds mo is lesser than its face value. And then that is because the effective rate is higher than the nominal rate. So dahil mas malaki nga yung effective rate, then you will incur more interest expense compared to the actual interest paid. That is because ina-add sa interest expense, charge natin sa interest expense yung amortization ng discount on bonds. Okay? Later, titingnan natin kung paano ina-amortize ang discount on bonds. So we have an example here. A company issued 5 million, 8% 5-year bonds on January 1. The interest is paid on June 30 and December. O yan. So ang gagamitin natin dito is ordinary annuity kasi walang advance payment na nangyari. So gagamitin niyo yung annuity due kapag may advance payment na nangyari. Pero kung wala, ordinary annuity ang gagamitin natin. So the solution, ang solution natin, so 5 years yung life ng bond, pero yung interest rate are being paid semi-annually. So twice a year kang nagbabayad. That is why the total number of payments, meaning yung N mo is 10. Ito, itong ginamit ko dito na exponent 10. Saan nanggaling yung 10? Again, 5 years na life ng bonds times 2. Bakit times 2? Kasi semi-annual. Twice a year nagbabayad ng interest payment. And then, para consistent, 10 din yung gagamitin mo to get the present value factor of 1 na gagamitin mo to get the present value ng principal, which will be paid at the maturity date of the bond. Okay? So, ito yung solution natin. We have the present value ng principal, yan, using this one, present value factor, plus the present value of interest payments, using this factor. So, paano natin nakuha ang 200? Again, this is the interest payment. Interest payment is computed using your nominal rate. Nominal rate natin is 8%. So, that is, di-divide natin ng 2 kasi semi-annual ang payment ng interest rate. 4% multiply by the face value of the bond na 5 million. So, you will get 200,000. So, ito yun, 200,000. So, ito yung i-discount mo. Multiply mo siya sa present value factor. Then, you add the 2, you will get the carrying value of the bond. So, how are we going to recognize that one? Class, huwag niyo hahayaan yung mga journal entry natin. It's very important na alam niyo kung paano i-journal entry yung mga transaction. Kasi remember, accountant ka, ang ginagawa mo is gagawa ka ng financial statements. Ibig sabihin, magpo-prepare ka ng balance sheet. So kung hindi ka marunong mag-journal entry, how are you going to know or to identify kung ano yung magiging effect ng mga computation na to sa balances ng mga accounts. So, ibig sabihin, na-compute mo nga ito, you have this solution, what now? Okay? What will happen? Ano-ano yung mga accounts na affected? So, you have journal entry, cash. Saan galing yung cash? Yan yung na-receive mo from the issuance of the bond. Meaning, di ba kaya nga tayo nag-i-issue ng bond kasi gusto natin mag-raise ng fund that we are going to use to fund our project. So, naka-receive ka ng cash galing dun sa bumili ng bond mo. So, ang binayad niya sa'yo, ito yung fair value ng bond. Ito yung kinompute natin. Ito siya. Yan. So, yan yung matatanggap mo. Ibig sabihin, yan yung naging presyo ng bond. Yan yung binayad sa'yo. So, that is the present value of the bond. I-record mo debit cash, of course, kasi yan yung natanggap mo. Then, i-credit mo yung liability. Ang liability, sinasabi ko sa inyo kanina, always nyo itong i-record itong bonds payable na account na to at face value. Okay? And any difference between the two is considered the discount or premium. Depende. Kung mas malaki ito kaysa dito, ibig sabihin may discount. Pero kung mas malaki naman ito kaysa dito, ibig sabihin may premium. Just like our previous example. So, for this example, meron tayong discount on bonds payable. So, itong discount on bonds payable, we are going to amortize this one over the life of the bonds. Unti-unti natin siyang i-charge to an expense account or yung interest expense. Itong, of course, because nag-debit ka ng cash, tataas yung cash mo, may additional sa cash mo. And then, nag-set up ka ng obligation, which is the bonds payable. And then, saan mo makikita itong discount on bonds? Debit balance siya, asset ba siya? No, of course, it's not an asset. You will not find discount on bonds payable on the asset section of your balance sheet because this account is a contra liability account. Makikita mo siya doon sa liability section na dinideduct sa bonds payable to get the carrying amount of the bonds payable. Ang carrying amount ng bonds payable would be ito, yung kinumpute natin. Okay? That is on the initial measurement ha, wala pang amortization na nangyari. Of course, once nag-start na tayo mag-amortize, magbabago yung carrying amount ng bonds. Okay, next. Transaction. So, di ba nasa ano pa lang tayo? Initial measurement pa lang tayo ng bonds. So, initial measurement, kapag of course, kapag ka-issued at face value yung bond mo, yung carrying amount niya is yung face value niya mismo. So, face value is equal to purchase price or face value is equal to its carrying amount at the beginning or its issuance. And then, marunong na din tayo mag-identify kung anong fair value niya kapag ka-issued at a discount siya. Next, kapag ka-issued at a premium siya. Now, we'll try to understand what if merong transaction cost? Kasi remember, di ba, sabi ng standard, the financial liability will be measured at fair value less transaction cost. Okay? Sabi niya, less transaction cost kapag yung financial instrument daw na yun is not measured through profit or loss. And of course, na-discuss natin kanina na hindi through profit or loss ang bonds kasi nga, the investors are holding the bonds to earn interest. Okay? Hindi siya income from changes in fair value. Ano siya? Income from interest. Yung mga interest na binabayad ng bond issuer. So that is why we have to consider transaction cost. So what will happen kapag merong transaction cost? So sample problem. On January 1, 2020, the company issued $1 million bond at face amount. Okay? So, nominal interest rate natin, 10%. Ang face value ng bond natin is 1 million. So, we have due date, December 31, 2022. Meaning, ilang years ang life ng bond? 3 years. Okay? So, the interest is paid annually every year end. So, the company paid 48,037 pesos to the underwriters. So, yung mga underwriters na to, ito yung mga tao na tumutulong sa company regarding sa mga paperworks until maging ready for issuance na yung corporate bonds nila. So, yung mga kailangan bayaran, for example, kung may mga kailangan pa-register, yung mga promotion, for example, paano malalaman ng public na nag-i-issue yung company nyo ng bond. So, of course, you have to inform the public through publication, promotion, for example. So, yung mga ganong klase ng mga expenditures. Okay? So, those are transaction costs. Okay? So, payment to underwriter is a transaction cost. So, what will happen kapag merong transaction cost? So, take note, sinabi ng problem, the bond is issued at face amount. So, kapag sabi natin, kapag issued at face amount yung bond, kung ano yung face value niya, yun yung total amount na babayaran sa iyo ng investor or kung sino man yung bibili ng bond na ino-offer mo. So, you have bond issued at a face, kaya ang carrying amount sana na i-record mo is 1 million. It is equal to the face of the bond. Pero dahil nagbayad ka ng transaction cost, so nakatanggap ka ng 1 million pero nagbayad ka ng transaction cost. In effect, ang net cash na natira sa'yo is 951,963 pesos. Okay? So, anong nangyari? Diba? Sabi natin kapag issued at face value, it should be equal to the face value. Pero dahil nga mas lesser yung net proceed mo, lesser yung magiging carrying amount ng bond, ito na, yung sinasabi niya kanina, fair value less transaction cost equals the carrying amount of the bond at initial measurement. So, dahil nga mas mababa yung carrying amount from the face value, anong meron? Anong nangyayari? Ibig sabihin, meron tayong effective interest rate na mas malaki compared doon sa nominal interest rate. So, ano ngayon ang mangyayari? Saan natin kukunin yung effective interest rate na yun? Saan yun manggagaling? Okay? So, yun yung magiging problema natin actually. Okay? So, the transaction cost decreases the carrying amount of the bond as per standard. Yan yung sinasabi ng standard. Ibabawas. Okay? Kung mapapansin mo naman, kung yung reason kung bakit pinapabawas yan sa'yo ng standard, kasi nga, in effect, ang net na natanggap mo is ito na lang. Ito. Kasi nga, nagbayad ka pa ng transaction cost. And then, accordingly, the effective interest rate would be different from the 10% nominal interest rate. Okay? effective interest rate will be computed using the trial and error approach. So, sabi ko kanina, meron tayong effective interest rate na mas mataas doon sa 10%. Paano ko nalaman na mas mataas siya sa 10%? Kasi mas mababa yung net proceed ng bond compare sa kanyang face value. Ibig sabihin, merong discounting na nangyari. So, kapag discount, ibig sabihin, mas mataas yung effective interest rate compare sa nominal rate. So, itong formula na to ang magiging guide natin sa trial and error na gagawin natin. So, for us to identify that effective interest rate, we have no choice. We have to do the trial and error approach. Okay? Until ma-identify natin kung ano yung exact interest rate. So, ang journal entry muna natin to record this at initial measurement, itong transaction na to at initial measurement, you receive net cash na 951,963. Again, ulit-ulit, nire-remind ko kayo, you are going to recognize the bonds payable at face value. Credit bonds payable, 1 million. So, the difference, of course, yung binayaran mong transaction cost. So, i-record mo yun separately. Anong ibig sabihin ng separately? Hindi mo siya i-net sa bonds payable. I-record mo siya separately as bond issuance cost. Okay? Debit. Okay? So, this will also be a contra liability account. Dinadagdag siya sa discount on bonds payable kung sakali mang merong discount on bonds payable and ina-amortize siya. Meaning, itong bond issuance cost is amortized over the life of the bond just like the discount on bonds payable. Unti-unti mo siyang i-charge into interest expense. Okay? So yan, yung sinasabi niya dito, the transaction costs are recorded separately and will be subsequently amortized using effective interest method. So every year, magre-record tayo ng debit to interest expense, credit to bonds, issuance cost. Ibig sabihin, ini-spread natin yung effect niya doon sa financial performance ng company. Kung iisipin mo, bakit kaya ganun, no? Bakit kaya? 'Di ba? Yung ban is for long term. Okay? So dahil long term yung ban, we are expecting that yung impact niya is sa operation ng company is also long term. Yung ban issuance cost is related to the bonds payable. At dahil long term yung bonds payable, it would be unfair kung yung buong bond issuance cost is i-charge mo as expense during the year of issuance. Ang year of issuance natin is 2020. Kung i-charge mo yung buong issuance cost na 48,037 sa 2020, magiging unfair yun para kay 2020. Bakit? Kasi si 2021 at si 2022, pareho silang magbe-benefit din doon sa bonds payable. Kasi covered pa yan sila ng life ng bonds payable. So, dapat hati-hati tayo dun sa expense. Kasi kung titingnan mo ang performance ng 2020, maybe for example, material masyado yung bonds issuance ko. So, ang effect nun, mas mababa yung net income na nire-report nila that time kasi nga chinarge mo lahat ng bond issuance cost dun sa year na yon, which is hindi dapat ganon. Dapat i-spread mo yung bond issuance cost. I-amortize mo siya. Unti-unti mo siyang i-charge into expense kasi kapag chinarge mo siya sa expense, of course, it will decrease your profit. And remember, yung profit ang basihan ng financial performance. Mas malaking profit, mas magandang financial performance. Okay? So, ibig sabihin, para hindi fair sa financial performance ng 2020, you have to amortize the bond issuance cost over the life of the bonds. Okay? Using the effective interest method. Okay? So, ang mangyayari, i-charge natin siya. Ayan, dito sa journal entry na to, kung mapapansin nyo, sa 2020, ang chinarge natin na expense, ibig sabihin, ang mababawa sa income natin, di-decrease ang income natin because of amortization of bonds issuance cost. Ito. Okay? Ito, sorry. Ito yung total interest expense na ni-report mo. Ang composition nito is both the amortization of bond issuance cost and the interest paid by the company, which is yung interest payment ito. So yung bond issuance cost na na-charge to expense for the current year will be itong 14,236. So hindi natin i-charge lahat kay 2020 yung buong 48,000. Kay 2020, 14,000. Kay 2021, 15,000. And kay December 31, yung 17,000. So yan. Yan yung sinasabi ko, it will be reflected into the income statement by charging the bond issuance cost into interest expense over the life of the bond. Unti-unti mo siyang ina-amortize. Going back dun sa trial and error natin, so, 'di ba, ang ating guide formula is this one. Okay? So, sa trial and error, alam natin na we computed this one by discounting the face value and the interest payments. So, ngayon, ito yung formula. Alin ngayon yung hindi natin ma-identify? Itong present value factor. Hindi natin yan ma-identify kasi hindi natin alam kung ano yung effective interest rate. So, we are going to try trial and error. So, ang nominal interest rate natin is 10%, di ba? Okay, 10%. So, sabi natin the effective interest rate should be higher than the nominal rate. Kasi nga, mas mababa yung carrying amount compared sa face value. So, we will start from 10%, tatry natin ng 11%. Kung lalabas yung answer. Makukuha natin ito kung makukompute natin to using 11%. Kung hindi, try naman natin ng 12%. Kung hindi pa rin, try natin ng 13% until makuha mo yung tamang answer. So sa problem na to, sa first try, ang ginamit niya is 12%. So using the 12%, makukuha niya yung tamang answer. So ibig sabihin, ang effective interest rate natin is 12%. Okay. So to journalize, to continue the journal entry, meaning the amortization of the bond discount and the payment of interest expenses, ito yung journal entry natin. So for December 31, every end of the period tayo magre-record ng interest expense kasi nga annual yung payment ng interest expense, sabi sa problem. So, December 31, magre-record tayo ng interest expense. So, other than the 100,000 na interest payment, that is the nominal interest rate na 10% multiplied by the face value na 1 million, you are going to pay interest na 100,000. Other than that, meron din tayong amortization ng bond issuance cost natin. Paano natin ma-identify kung magkano yung i-charge natin sa expense? Magkano bond issuance cost ang i-charge natin to expense? So we have to compute for the interest expense. Remember, yung interest expense, kino-compute natin using effective interest rate. Mino-multiply natin yung effective interest rate sa carrying amount ng bond. So ito yung carrying amount. Remember, yan yung kinompute natin. So, carrying amount multiplied by the 12% na effective interest rate na na-determine natin using trial and error, makukuha mo yung interest expense. So, dahil ang interest paid lang dyan ay 100,000, yung excess niya, yun yung amortization ng bond issuance costs. And again, on December 31 ng 2021, mag-amortize ka ulit and magre-recognize ka ulit ng interest expense kasi magbabayad ka ulit ng interest. So dahil 3 years ang life ng bonds natin, hanggang December 31, 2022. 5:30, ma'am. Bye-bye, ma'am. So, hanggang December 31, 2020 tayo mag-amortize. Pero dahil nga hanggang December 30, itong error, itong June dito, December 31 dapat. December 31, 2022 ang left ng bonds natin. Ibig sabihin, i-retire natin yung bonds natin dito. Nag-mature na siya, so we will have to pay for the bonds. So to cancel out the bond kasi nga nabayaran na natin siya, i-debit mo yung bonds payable and credit cash. Sabihin you paid 1 million for the face amount of the bond. Okay, so before you do this entry, i-amortize mo muna. Ang ibig sabihin ng amortize, ito, amortization. I-record mo muna yung journal entry for amortization. Ay, time na pala. Okay, so we will end here kasi yung previous class dito kami nag-end na slide. So next meeting, we are going to start from here. So yun lang muna. We will continue next meeting and sana matapos natin siya yung buong topic ng bonds payable. Okay, wala na kayong tanong?
Wala naman.
Naintindihan nyo rin? Saan? Saan? Ibalik ko, oh. Ito? Ito? 2021. Ito? Okay, so, makukuha mo yan, di ba kasi ang interest expense, paano natin kinocompute ang interest expense? That is the carrying amount multiplied by the effective interest rate. Yung carrying amount na tinutukoy natin dito is yung carrying amount niya after the amortization. So, ang carrying amount niya kasi because of this entry itong sa December 31, 2020, mag-change yung magiging carrying amount ng bonds mo. Bakit? Kasi 'di ba, initially ang carrying amount ng bonds mo at initial recognition is 951,963. At 'di ba? Idadagdag mo dito yung na-amortize na bond issuance cost. Oo, idadagdag mo yung na-amortize na bond issuance cost. Okay, later papakita ko kung bakit idadagdag yan. Okay? So, pag nadagdag mo yan, yung total, yun yung magiging bago mong carrying amount. So, yung bagong, hanggang maging 1 million siya. So, kapag ka nakuha mo yung bagong carrying amount, yun ngayon yung i-multiply mo sa 12% para makuha mo yung interest expense dito sa 2021. So, that is 951,963 plus 14,236 times 12%. You will get 115,944. So, mas maiintindihan niyo yan kapag gumawa kayo ng amortization table. So, yun. So, kasi nga, di ba, sabi natin, paano ba ang formula for the carrying amount? So, ang formula for the carrying amount, yung face value niya, less yung bond discount. Ito. Actually, ito. Sandali. Ito. Ito yung formula to solve for the carrying amount. So, dahil nga nabawasan itong transaction cost or yung bond issuance cost, bakit siya nabawasan? Kasi inamortize natin siya. Kung mapapansin mo dun sa journal entry, kinredit siya. So, ibig sabihin, nabawasan yung outstanding balance niya. That is why, mababawasan yung ima-minus sa 1 million. So, instead na mag 1 million minus ano ka pa, kumbaga, yun yung long way of computing niya. Ang shortcut mo is, yung previous carrying amount, i-add back mo lang yung amortized bond issuance cost. Okay? Nagets ba? Okay, sige. May iba pang tanong? Wala na. Yung iba dyan, wala na din? Okay, sige. Okay, so we will continue next meeting sa mga hindi pa natin na-discuss sa bonds payable. That's it for today.
Yes.
Thank you.
Thank you, ma'am.
Thank you, ma'am.
Okay.
Bye-bye.
Bye-bye. You may leave the
Bye
meeting.
po.
Bye-bye.
Bye-bye. Asan yung leave? Ayun, taas.